This content is brought to you by Uphold, which is a great platform that makes it easy and simple for you to buy, hold, and sell and earn crypto. You can trade from anything to anything. For example, you could trade between cryptocurrencies and precious metals. It's an amazing platform that I've been using for years. And in fact, I still use to this day because they're one, a great exchange, they're reputable, and they're one of the only exchanges that still lists XRP. Many of the other exchanges have delisted XRP due to the SEC lawsuit, but you can still get XRP on Uphold. So I've interviewed the CEO, the founder, and many other representatives from Uphold over the years, and I'm a fan of this platform. And once again, there's some great features like trading between different assets very easily. You don't have to convert to a currency and so forth. They're used by 10 plus million users. They have over 200 cryptocurrencies. And they have a very easy to use app. The interface is really nice. So I can certainly vouch for this platform. Once again, I've been a user for years. So if you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Gareth Soloway of verifiedinvestingcrypto.com and inthemoneystocks.com. Gareth, great to have you back on.
Hey, so good to be back. Thank you for having me.
Gareth, we've been talking for months, and you, of course, had the thesis that Bitcoin was going to go down to around $10,000 to $12,000. However, things have escalated since then. We've had a black swan event, and that is the FTX collapse. Is your thesis still holding that we're going to hit that, or maybe we're going to go lower?
Yeah, so for the most part, my thesis is pretty much intact. I think there's a huge amount of support around 12 to 13,000, but I do ultimately think we go down, we break 10,000 just for a short amount of time, maybe touching the 9,000 level. One of the interesting research pieces that I did was comparing FTX to the Lehman Brothers collapse in 2008. And what's fascinating about that, and you can see the mirroring, right? You had this major exchange, which in the crypto world is kind of like a big bank. And then you had Lehman Brothers, which was a big bank in '08. And what's interesting is that it took about 5 to 6 months following Lehman for the markets to actually bottom out. So what that does is it gives us a potential point of where to look for a bottom. And the question is, how much lower does Bitcoin go? And from the Lehman Brothers collapse, when it filed for bankruptcy in '08, it basically caused the S&P to drop about 40 to 50%. Well, if we take 40 to 50% away from the current price, we're down, but right around that $9,000 level. So for me, that's kind of isolating. As we get closer, I think that's what we're looking for in terms of a bottom on Bitcoin. So again, I guess there's a positive and a negative, right? The negative is we still have lower to go. The positive is we're actually starting to get close to what I would call a near bottom. And I think that's exciting. If you're someone like me that loves Bitcoin in the future, it's exciting to be like, okay, it's almost done. Yeah, a little bit more pain and it's going to be rough. There's going to be a lot of people when we get down to 10 or 12 that are going to be panicking, but be calm about it. Make sure that the thesis for Bitcoin is still intact, which to me it is. And therefore you think logically and you're a buyer at those levels.
And to your point that it could take 5 to 6 months from now for us to see the bottom, the contagion of the FTX collapse is still spreading. I mean, we're seeing companies saying, oh boy, we're about to file bankruptcy, or we need a line of credit for $1 billion. Yesterday was Genesis Trading. Today is Digital Currency Group and different folks. Well, same company, but the BlockFi and all these folks.
Yeah, you're 100% right. And so we don't even know all the damage yet. It's just filtering out like you mentioned. And I think you have to keep in mind that a lot of these firms have crypto on their balance sheet. And if they're forced into bankruptcy, they're going to be forced to sell that crypto, and it's going to continue to put pressure. In addition, I think the biggest negative for crypto right now is that after FTX kind of blew up, there's really no big money that's going to feel comfortable going into any cryptocurrencies at this point until we have regulation, until we have transparency. You saw it with Kevin O'Leary with his comments. He was basically like, I'm headed straight for Washington to get regulation going because I will not go within a 10-foot pole of essentially another crypto at this basis based on the fact that he lost so much money. And so again, we have to kind of keep in mind that that's going to be a headwind. Then you throw in the fact that I don't think the stock market has bottomed as well. And if we see more downside in risk assets, then we could also see Bitcoin under pressure. So all these things will push it down, but the question is, at what point does it bottom? And I think the biggest thing is, like, even with me saying 9,000-ish, I'm not waiting for 9,000 to start accumulating. In fact, I've already accumulated a small amount, because if we don't hit 9,000, I don't want to be left holding zero when we start our way back up. So what I'm doing is basically I'm spacing out my buys. Every 3,000 down, I'm just buying the equivalent of like a 1/6 position, equaling a 6/6. And essentially that gives me that ability to dollar cost average in all the way down. Even if it goes to like 5,000, I'll still dollar cost average in down there.
Yeah, that absolutely makes sense. Could you share the charts, maybe for Bitcoin, Ethereum, and XRP, and what you're seeing as far as the short term?
Yeah, absolutely, absolutely. So here we have the chart of Bitcoin, right? And what we can see here is that Bitcoin is holding steady, and we can see right here it broke to the downside. And you can see this, right?
Mm-hmm.
All right, so basically this was a major support line. We have a pivot from June. It connected through here and right here, and we finally broke that. And what we're actually forming, this is called a flag pattern, a bear flag to be exact. And I'll draw it in so those of you that can kind of see. So here's your flagpole, which is a vertical drop. And then essentially you have a move here, and you connect these highs, and you can see how it's like an upside down flag pole, right, with a flag. And so that's known as a bearish pattern, and that usually probabilities dictate that it will break lower. And breaking lower is going to take us down to this pivot from 2019, and then this one from 2020. And that's going to be major support. That's right around that 13,000 area, at which point, if we should get a bounce. But ultimately, I would expect a final flush down. And then we have this long-term trend line, which coordinates with that Lehman Brothers kind of correlation, which is right around $8,000 to $9,000. And that's kind of where I'm looking for Bitcoin to bottom. And what's fascinating about this is, if we go down to that $8,000, $9,000 level, it's doing is it's taking us down to the long-term uptrend of Bitcoin, right? From the long-term low here from 2017, before the first big bull market there. And then this one little in here, there's their COVID low. And basically all you're doing is connecting those lines, those points, and you get that target price. So it's kind of cool how that works, how you have a thesis like, okay, what happened with the Lehman Brothers collapse? All right, let's look at the correlations there. And then you also find a trend line that coordinates as well. It's pretty powerful stuff.
So you mentioned that we could see a bounce. When do you think that happens, and what's the trajectory? How high may we go?
Yeah, so I would say in general that if we go, let's say, to 12 to 13, I think the bounce would then take us back to that trend line that we just broke. So if we look at the chart again here, what we can see is that basically this line now becomes a major resistance. So when you break support, it becomes resistance. And especially a line like this that we were bobbing up against for such a long time, it breaks to the downside. So let's say we go to 12 to 13, we go down in this range here. You would expect a snapback back to that line, which is around 18.5. So I think, in all fairness, that's, what is that? Almost a 50% move off 12,000. So it's worth trading. Like, I'll be swing trading it, but I probably won't be, jumping in heavily on the long side for longer than a swing trade at that point.
And for Ethereum, are you seeing a similar pattern, since altcoins for the most part follow Bitcoin?
Yeah. So what we see here is there was this wedge pattern here, and we can connect the highs going all the way back to the Ethereum all-time high. Here's this pivot point here and this pivot point here. And then you could connect the lows, which mimic kind of the Bitcoin channel that it was creating. And it creates this bigger wedge pattern. And what we can see here is that Ethereum broke to the downside. It retraced, tested that line, and has been fading since. So I would kind of be in that same camp of saying, okay, unless we somehow recapture this area and get back above it, you have to favor the downside on Ethereum. So we're looking at potentially retesting that 900-ish area, which was the low on Ethereum. If Bitcoin really goes to 9,000 or even 10,000, you got to imagine Ethereum's down at 600, if not even a little bit lower. But same kind of feeling with Bitcoin is that, once you get down sub 1,000, I think you're playing with the house's money as you accumulate. Obviously dollar cost average in, but if you ask me which are the safe cryptos to invest in for the longer term, there's only two of them, Ethereum and Bitcoin. Now, other people will tell you, oh, it's Ripple or this or that. But to be honest, I don't know if I'm pretty confident on Bitcoin and Ethereum. I'm not confident on anything else because we don't know the regulation yet. We don't know the rules that they're going to have to abide by, the technology, all that kind of stuff. So I would say, again, once you get to certain levels, it really makes sense to start accumulating Ethereum. I just think they're both going lower in the near term.
Now, you also have, from the macro perspective, the Fed continues to fight inflation. They continue to raise rates. It seems like this is going to continue into next year. So there's just more pain. Plus, you have these black swan events happening in the crypto market.
And that's what investors have to realize too, is that as you have the Fed continuing to tighten, now it looks like inflation is starting to kind of subside a little bit. So the Fed may not have to hike 75 basis points in December. Maybe it's 50, maybe it's 25. We'll have to see. But there's no doubt that as we go down, in the stock market, because of the Fed kind of contracting the monetary system, there's going to be more hurt in the crypto markets. And I fully expect more bankruptcies. My only hope is that FTX was the biggest, right? Let's get that one out of the way. If some smaller ones go bust, it's never a good thing, but at least it's not as earthquake-like as the FTX one. So there's no doubt that the Fed is doing this. And it's part of the reason why this bear market cycle could be just a little bit longer. You don't have the Fed printing money. I think the biggest thing that gets us out of this bear market is regulation. And who would have thunk a year ago or 2 years ago you'd ever say that regulation gets us out of a bear market in the crypto markets? But if you're going to attract big money back into crypto, which, let's be honest, big money is going to drive the price up, right? They're all buying, hundreds of billions, if not more, buying. You need that regulation. You need that transparency. And I think even with, just think about a small investor. A small investor has a hard enough time picking buying opportunities in crypto where they're going to make money, not lose. But they also have to worry about, is my exchange where my money is it going to be in business tomorrow? That shouldn't be an issue. I mean, especially in this day and age, where we have all this technology and everything, it shouldn't be an issue. And I hope they fix it, and I think they will.
Let's talk about the stock market. Maybe you can pull up the charts there. What's your outlook on that short term as well?
Yeah, so I think, real short term, you're coming into the holidays, you could kind of see a little bit less volatility, but there's no doubt that the S&P is still in a downtrend. You have a high, lower, lows, lower lows across the board. So we are in a downtrend. I think we have to recognize that the economy is clearly slowing, contrary to what the Fed has kind of been telling us. It's absolutely slowing down, and that means that earnings are going to be lower. And you really don't see the S&P PE price to earnings ratio being at a level where it probably needs to go to factor in that slowing economy. And I honestly think it's going to be a very dramatic slowing. It's not just going to be a minor recession. I think it's going to be a pretty hefty recession because the Fed has really printed us out of every past recession. They've gotten things going. They can't do that now because of inflation being as high as it is. Even if it comes in, unless it goes back to 2%, how do they print us out of a recession? So I'm looking at a more protracted, like a longer term recession that really is going to hurt stocks like Apple and Microsoft and these other big names. And that's what makes up the indices. So I think by the end of this year or early 2023, the S&P tags this pre-COVID high, which was from February 2020. It's around just under 3,400. But I'm actually looking at potentially you could be seeing by next year, you could be down to this trend line at around 3,000 on the S&P or just sub 3,000. There's a great trend line right here. So I think there's more downside to go. I'm actually at this point, you give me Bitcoin at 10,000, I will take it every single time versus where the S&P is right now on the long side.
So I know you're more of a trader, but are you buying any stocks for a long-term hold as the prices come down?
So not so much on the long term side. Definitely more of a trading environment right now. We get these amazing pops and then drops and then pops and then drops. What I am doing, I'm continuing to kind of slowly accumulate gold. I think that at some point we're going to continue to see this dollar pullback, and that's going to be very, very good for gold. I also think that eventually crypto is the place you want to kind of hide. And again, when I say crypto, I mainly mean Ethereum and Bitcoin. But I think that those will eventually shift from being risk assets to more of a safety hedge as the economy gets worse and worse and worse, right? So as the economy gets worse, these companies in the S&P are going to make less and less money as the consumer pulls back. But crypto really doesn't have that factor, right? I mean, Bitcoin is just a store of value in a inflationary environment. And I think that's going to be the key is once you hit this low on Bitcoin, let's say 9,000, I think it turns into an asset that actually starts going up as the economic activity starts to go down.
A very tough question for you. If someone, let's say, is a long-term holder, they haven't fully cashed out everything that they were holding through the bull market, should they cash out now, wait for 9,000 or?
No, honestly, at this point, I think it's too late. And again, you have to be anyone who's in that position that's in at 50 or 40 or 60, whatever it may be. I think at this point, you're down from 69 to 16. Maybe it goes to 9. That would be kind of a worst case. Maybe it goes to 7. But, you're now dealing with such a small amount of a drop comparatively from 69 to 16 that it probably doesn't make sense to risk missing the bottom to exit now just in hopes of saving yourself a few thousand per coin. So for me, I mean, one of the things that I've done is I've actually started accumulating, and again, basically what I do is once we got below 20, I started to say, okay, how much money do I want to invest in Bitcoin? And I basically decided on an X amount, a certain amount, and then I divided it up into 5 or 6 portions, equal portions. And essentially what I do is I said, okay, well, once we got below 20, I put 1/6 to work. And then basically every 3,000 down, I'll just put another, 1/6 essentially to work. And that's that kind of dollar cost averaging where even I'm starting to buy in a little bit, just nibbling, because I don't know specifically if my downside target is going to be hit to the penny, and I don't want to miss the next bull run, which I do think will come. I think, again, as soon as you get that regulation, think about this. Imagine all of a sudden you knew how these companies were allocating their funds, how you knew if they were leveraging, I mean, it's so amazing to even think about that transparency. And now look at it from a perspective of a big investor or a pension fund where they can now say, okay, these Bitcoins or this Bitcoin or this Ethereum, there's going to be specific due diligence done, revealed, like rules. Now I can actually put some of my pension fund in that Bitcoin, let's say. And it just opens up this whole world of investing and investors that can be epically big for Bitcoin. And I think the next run takes us well over 100,000.
So I know last time I asked you this question, and I know it's a bit of a moving target because of what's happening. You figured by the middle of 2023, you're going to flip bullish?
Yeah. I mean, for sure. I would even call myself only slightly on the bear side now because I think we're getting closer versus, I mean, when we were at 60, I was like ridiculously bearish, 50 ridiculously. Once we got below 20, it's like, okay, we're getting there. And now I see, it's kind of like you see the light at the end of the tunnel. You can just start to see the end game here. And it's exciting because I'm a big fan of Bitcoin long term. It's just I couldn't do it until I thought that the bottom was at hand.
Sure. Any thoughts on the real estate market? I know mortgage applications, everything is dried up for the most part, and it seems like valuations are coming down.
Yeah, I mean, so I got back. I was in Boston a couple of weeks ago, and I took an Uber home, and my Uber driver was a real estate agent, and that tells you everything you need to know about the real estate market right now. Right. So, the bottom line is interest rates have gone up so quickly and so dramatically that the housing market has dried up. I think you will see minimum 20% downside in housing, probably more than that too, because as the economy weakens and people start losing their jobs, then it's going to make it even harder for them to buy, let alone with prices where they are, with interest rates where they are. So I do honestly think at minimum, we're going down 20%. And it's going to be a tricky thing. I mean, unless we get inflation under control, interest rates aren't going to come down for a while. So the housing market's going to be in some trouble for a little while.
Gareth, always good stuff, man. Very insightful. Appreciate you.
Thank you so much. It's really awesome to talk to you. Thank you.